Life insurance policy provisions, options, and riders. Common exclusions or restrictions. Exclusion, a feature of life insurance policy, states that the policy will not cover certain risks. Exclusions and restrictions are situations or conditions which are not covered or covered with substantial limits. The common ones are injury due to war or an act of war, self-inflicted injuries, and those incurred while the insured is serving as a pilot or a crew member of an aircraft. Other exclusions are losses result from suicide, herein as an accidental injury, riots, or the use of drugs or narcotics. Loss due to injuries sustained while committing a felony or attempting to do so also may be excluded. Foreign travel may not be excluded in every instance, but extended stays overseas or foreign residence may cause a loss of benefits. Occupational injury and illness are covered by workmen's compensation and typically excluded. The exclusions section is not included in the policy face, first page of an insurance policy. Suicide clause, the policy will not void and no death benefits will be paid if insured commits suicide within 1 year from the policy. The primary purpose of a suicide provision is to protect the insurer against the purchase of a policy in contentment of suicide. Aviation. The insurer will not pay the claim if the insured dies due to an involvement with aviation, such as a military pilot or flying a jet aircraft. Warning, war or military service. The insured will not pay the claim if the insured dies while in active military service or to act of war. Hazardous occupation or hobby. If the insured dies as a result of hazardous occupation or hobby, the insurer will not pay the claim. Waivers for impairment. With an insurance company does not cover loss due to a specified condition the insured has. This is usually called an impairment rider. If the insured condition improves, the company may be willing to remove the waiver. Policy options. Non-forfeitual option. You are closing your account, surrendering your policy. What do you want us to do with your cash so you don't forfeit it? When a policy owner decides he does not want his life insurance policy anymore, he has the option to surrender his policy. If there is cash value remaining, he must use one of the following non-forfeiting options. Cash surrender allows the policy owner to receive the policy cash value. The policy owner no longer has coverage at this point. Normally, the maximum length of life insurance company may legally defer paying the cash value of surrendering a policy is 6 months. Extended term options permit the policy owner to use the policy cash value to buy, level, extend term insurance for a specified period. No premium payments are made. The coverage provided with the extended term non-forfeits. The option is equal to the net death benefit of the lapsed policy. Reduced pay-up option. The policy owner pays no more premium, but face amount is decreased. Dividend option. Participating policies divide to a policy owner if the company operates as a result in dividend surplus. Recalls the dividends are a return of overcharged premiums and therefore are non-taxable. Insurable typically are paid dividends on the annual basis. The following dividend options are available to policy owners for settling dividend payments. Cash options. Take the cash. It's your money. You can take it and run. Reduced premium options. Reduced premium options. Reduced premium payments. Just keep in mind that next year you don't charge me, so on. Accumulate interest options. Allowable dividends to accumulate interest options is the only thing you can be charged tax on. Pay up additional options. Purchase single payment whole life coverage. 1 year term option. Purchase 1 year term option. Keep in mind with dividends, the policy is still active. Policy riders. Waiver of premium riders. Allow policy owners to waive premium payments during a disability and keep policy in force. It does not provide cash payment for the policy owner. The disability must be total and permanent and have substantial throughout the waiting period, 90 days or 6 months after a certain age, usually 60 or 65. The waiver of the premium rider is void. Waivers cover the premium insured, does not provide income. It is not a loan. The insurance company is waiving the premium. It's just as if the insurance made the premiums every month. Payer rider or payer clause. If the individual paying the premium on a juvenile life policy becomes disabled or dies, the payer rider ensures the premium will be waived. Accelerated benefit rider allows the insurer to receive a portion of the death benefit prior to death if the insured has a terminal illness and expected to die within 1 to 2 years. Whatever amount is withdrawn in an accelerated death benefit will decrease the death benefit when death occurs. Accelerated benefits. Your doctor says that you are going to die, so you are going to stop paying your insurance since you know you'll need it soon. Insurance companies now know that you are going to die soon, which means that they are going to have to pay out the benefits. To To make things a little easier and less stressful, they will give you some of the proceeds now and deduct from what would go to your beneficiaries at your death. Accidental death benefit rider, multiple indemnity, pays an additional sum to the beneficiary if the insured dies due to an accident. The amount paid is multiple of policy face value, such as double or triple the original benefits. Truly, the cheapest way to add a lot of coverage for a period of time. Additional death benefits and dismemberment may be added to life insurance policies. Pays benefits for dismemberment and accidental death. Pays a principal sum for loss of both hands, both arms, both legs, or loss of vision in both eyes. AD&D, face value, for accidental loss of 2 hands, feet, eyes, etc. Half face value, for loss of 1 foot, hand, eye, etc. 1 foot, 1 hand equals 100%. General insured rider permits the policy owner to buy additional permanent life insurance coverage at a specified point of time in the future without submitting proof of insurability. It is also includes specifying events like marriage, birth, without requiring proof of insurability. Usually the benefits is allowed up to every 3 years, up to the original face value of the policy. Cost of living rider allows the policy face value to be adjusted according to inflation based on the consumer price index. Returned premium rider pays the total amount of the premium paid into policy in addition to the face value, as long as the insured dies within a certain time period specifically in the policy. It also requires premiums to the living insured at the end of the specified period of policy, as long as the premium has been paid. Automatic premium loan rider allows the insurer company to deduct override premium from the insured cash value by the end of the grace period. If a policy is missed on a life policy, the insured company can automatically take out a loan for cash on your cash value to cover your premium in the event they don't receive a payment from you. This can continue for as long as you don't receive a payment and you still have cash value. Once all of your cash value is gone, if you don't start paying, your policy will lapse, and this is just like another cash value loan.